from the top today, guys, we're going to go with 2025 mortgage predictions, your playbook for a winning year. Now, this is kind of more of like an insider article, and I say that because sometimes Housingwire puts things out that are more for the originator, for the sales practitioner, for the branch manager, that kind of thing. But the reason I brought this one up is because this includes things that are great best practices for people who are aspiring homeowners, and, you know, It right out the gate says, 2024 was a roller coaster. Yeah, duh.
I like that.
It was in some regards, and it was also really slow moving in others, right?
Yeah.
Because I don't know how you guys felt about that, but I read that right away. I'm like, yeah, it was a roller coaster, had some ups and downs, but like it also seemed really slow.
Yeah, but you know what?
It's like a slow roller coaster.
Yeah, but I liked it actually when I read that right away. It started off good for me because it was a roller coaster. We came from 2023 being, a low year with inventory, and it was just pretty crazy. Just getting your mindset ready for 2024, and then 24 started a little bit, slower. Then it picked up, and then we saw the thing with the rates. March, April rates got worse, so we started seeing things stagnant. June, I made the move.
Yep.
Right, to the new company. And then next thing you know, we got pretty darn busy.
Yeah.
And that's when rates were actually going down. And out of 900 some, Mortgage Heroes came out on the top 15, which was freaking phenomenal.
Yeah, congratulations, by the way, guys.
Yeah. That was great. That was a great thing to watch and see of how we just got super busy. And then, here we are, December. Well, I'm going to say 3 years prior to, we're super slammed.
Yeah.
And it's like the brakes just hit again, right? Because October rates started going up again.
Same thing as last year.
We started seeing same thing. We kind of had the pass through. So I like that. For me, it did feel like a roller coaster. I wish it was like if it was slower in the September time because it was a great time.
I think they're just missing a word. I think they meant emotional roller coaster.
Emotional.
I think that's what they actually meant.
I think
2024, the emotional roller coaster in mortgage.
There was a lot of moments where I feel like everybody was like, "Oh, it's back. Rates are they're coming down. We're so back." And then 1 week later, no, dude, it's all bad. We're going right back to high rates. But I think it was ups and downs. There was moments where rates did dip, and people were able to snag the lowest rates of the year. But then again, there was months like October where people got the highest rates of the years, and same thing. So I think moving into 2025, we will see a little bit more stabilization now. Seeing the trajectory. I mean, even though inflation's still high, I do believe the Fed's going to act and still continue their course of bringing rates down. So into the new year, that might help a little bit more. But I think we'll see a little bit more stabilization than the last couple of years as far as rates. And I do believe that rates will fall in between that 5.5% to 6% range in 2025. Okay. And given months will probably be higher. Given months will probably be lower, but I think, they're pretty accurate on that. And I want to hope they are.
So one of the things that they talk here about is that, 2025 is set to stabilize. It's one of the predictions is that, even though interest rates were unpredictable this year, and I want to come back to that in a minute, but I want to talk about the stabilization argument for a second. Like, do you think that 2024 was stable? Because it's like on one, I understand the argument or the opinion that, it was roller coaster, but I also saw a lot of stability. You didn't see like price spikes go through the ceiling like they had before. You didn't see like moody rate swings like we had done before. And there was like a kind of like a pretty steady moving along the course with real estate this year. It was not, the headlines weren't like drastic and dramatic and, this is falling apart or this is going gangbusters out of the. It seemed like it was pretty stable. Yeah. No?
Yeah, no, absolutely. And it was stable because we started seeing an uptick in inventory prior to the other years. Remember, everything's about supply and demand. When we don't have enough supply, there's going to be a lot more people not on the fence, but wanting to buy these properties because they're going to feel the whole FOMO, right? Fear of missing out. And so now that we're starting to see an uptick in the normalcy in inventory, and with rates being as high as they are, that's what is allowing the inventory to actually start climbing. We're actually, what I like about the article too, it's actually talking about 2025 seeing a little more normalcy, having more buyers coming into it where things are going to be more negotiable in their favor. So it's actually pretty good stuff. I mean, we're seeing that. So absolutely right.
So you think that this year kind of is the beginning of the stabilization, and next year will just be more of a continue. We have the benefit of looking in the rearview mirror now, like the entire 2024.
And I was going to agree with Will because I think it was stable enough compared to the last 3 years, 22, 23, and then now 24. I mean, 2024 was a lot better in a lot of measures. So even though it still wasn't what 2021 was, what 2020 and the years before that, it still was a lot better than those 2 years where it was like tumbleweeds, like, yo, like you really had to really strap your boots on and get out there. But now it was a little bit more like, hey, okay, we're starting to see the light at the end of the tunnel. A lot more sellers came out. Like Will said, more inventory started popping out. And then again, we started getting that interest of buyers like, hey, I want to start buying again. So we start seeing that demand creeping back in. And even though it was a wonky year, we still saw, more transactions than the two last years. So that's a positive sign in itself.
Yeah, exactly. I mean, we're going from 2022 having the historical lowest inventory recorded, which was like 250,000 homes available, to right now we have about 682,000 homes available. I mean, that's a big, and our normal is about 1 million. So we're about 20% off from our normal.
And the fact that didn't like squash prices, I think, is a healthy sign for people who are existing owners. It might spell trouble for people trying to get in because, we haven't seen a price correction or a steep price correction, depending on the area you're talking about. But it is interesting that it went from such a low inventory, which helped maintain elevated prices, and now we still have those same elevated prices, even though inventory has now come back.
Absolutely.
And honestly, I believe that this next year, it's going to be a lot more active than these last couple of years. And I think people should start now getting ready because people are used to, knowing that rates stayed high for 2-3 years, that prices are going to be remaining where they're at. And I think that's going to, just by the nature of the market, attract people to start transacting even more because they're now used to the fact that, hey, well, nothing's budged in the last 3 years. We still want to make this happen. Now that situations didn't happen the way that we wanted to, at least we know what we can predict and we know what's actually happening based on like the last 3 years. So
exactly.
It's like,
and
now I can make my decision.
That's what I like about the article. It talks about that. It talks about strategies for first-time home buyers. Aim for a 640 credit score for FHA loans and down payment assistance. Obviously, we know credit is everything, right? The higher the credit scores you have, the better terms and conditions you'll receive, when it comes to obtaining financing and anything. That actually works for credit cards, that works for car loans, for whatever it is, business loans, whatever you have. They're always going to run your credit to see your credit worthiness. And so the higher the credit, the better it's going to be, the better terms you'll receive. So I agree with that. Also it says aim into saving money. Being prepared. Even though there's down payment assistance programs that will give you grants, etc., there's always going to be an earnest money deposit that you'll have to put in. And there's always going to be, sometimes, the seller or these down payments won't always cover all your closing costs. So saving money and putting your credit where it needs to be is going to be a favorable position to be in as you look forward, forecasting to purchase a home in 2025.
I think just to add to that, like the down payment assistance program, it's so important to understand that, unfortunately nothing's free and you're going to pay, that fee or that money that's being given to you one way or another. And sometimes it comes in the form of lender fees. So
correct.
Just make sure that you're well advised when, using those programs.
Something I want to make sure that if you guys don't mention it, that I mention on behalf of you and for people who are interested is get started early. I mean, I know we kind of always say that, and I'm sure maybe I can become blue in the face from saying that, like, start early, get prepared, put yourself in a position to win. But it's true because kind of no matter the season, no matter what the market is doing, whether it's volatile or it's stable, there's an on-ramp towards homeownership. It's not like you just want to go to the store and buy milk and eggs. Like it's there. Oh, you expect it to be there. You can grab milk and eggs. You walk out the door. It ain't like that. It's like the opposite of that. There's way more prep you got to do, and it takes a lot longer. And so if you think that, you want to buy a house in the spring of 25, like start now. If you think you want to buy in the summer of 25, start now. Do it now because at least if there's something you have to cure, correct, or fix, or save a little more money, whatever it is, you have plenty of time to get there where you can actually still hit that goal.
Yeah, absolutely. I do I'm going to go back to the article here. It says, if 2024 was a roller coaster, 2025 is shaping up to be a championship game.
Yeah.
And every buyer, seller, and homeowner has a shot to winning big.
Yeah.
What do you guys think about that?
I agree because I think you're either going to be in the game or you're not, and that is just true. That's just turning out to be the tail of the tape. When it's all said and done, we went through the trudge of 2023. We've now seen all of 2024 except for our last 2 years here. So right now it's shaping up to be what it is.
Yeah.
Prices are where they're at, inventory is where they're at, and rates are where they're at. And everyone talking about looking for one of those to drop to drag the other two with it, it just hasn't happened.
Yeah.
And then I think that this whole priming that they're doing for interest rates, like they're going to be in the 6s or mid 6s or even low 7s, and maybe they'll touch high 5s and then come back to 6 again. That's all conditioning. When I read
It
stuff
is.
like that and I hear analysts say that and I see people projecting that, I go, this is all conditioning that they think this is where it's going to have to stay to maintain whatever outcome they're hoping for. And it's all priming. It's all conditioning. So I think that 2025 is going to be great for the people who say yes. And it's going to be, you're going to find yourself further and further in the line the more longer you wait to take action.
Yeah.
And I like one of the things that they mentioned, pro tip of the day, today's market is buyer friendly. Many sellers are willing to offer, 2 to 3% of closing costs. And I have seen this year was a year that I saw the most closing costs given, and sometimes in excess where it's like, okay, well, now you get to do a 2-1 buy down and pay some closing costs down. But one thing about, going back to what you said, it's going to be a championship year. I think strong teams and strong players win championship games. So I feel that, depending on who you're really partnering up with and who's really guiding you is going to determine whether you get those really good benefits from the negotiation.
I agree.
Because not everybody has that strong suit of negotiation, ability. Not everybody is very well, good at networking and has a great, book of business. But all that plays a part in this industry right now where everybody can offer the same, but how do you differentiate yourself? By knowing your stuff, being able to negotiate the best terms for your buyer. And I think that's going to be a huge differentiator of who you work with in 2025.
Exactly. And I'm glad you brought that up because that's one of the things that I wanted to make sure that I champion going into 2025, right? So I made a move mid last year in June for my birthday. I actually I rewarded myself by changing companies. I've been with the same company since 2009, which is great. But you always got to seek opportunities. And in this case, I kind of saw myself, how do we take advantage of opportunities? Well, one, we want to be very diverse in the products that we can offer, right? We want to surround ourselves with like-minded people who are winners out there, who give you the proper tools and strategies to make sure that you're successful so you can pass that on, to your clients, right? And so one of the things that I feel that's really changed is I can actually now represent a lot of the home buyers that I represented here in California in different states now.
Yep.
So that's a huge win.
Massive.
A lot of people like to stay within their own, sphere of influence, friends and stuff like that who will help them get there. So I am glad that you brought up that point.
And that's a great summary of one of the highlights of the year for me is making that change allows our clients who have been successful with us to continue having us moving forward in what their endeavors are. And I wrote this yesterday. I was writing somebody and I said, listen, we have a whole handful of people who we may have done their VA loan here. We may have done their IRRRL, the refinance, but then they go to a conventional loan in order to go and do something else somewhere else. And now we can go with them. They can take their team and their coach and their trainers and their massage person and their chiropractor. They can take all their people with them because being restricted to California didn't necessarily mean as much back then that it does now. It has completely changed. People are way more migratory. We have a lot of our active duty and veterans that are leaving California to go somewhere else later, and they couldn't take us with them. Now they can. I think that was an awesome move.
No, it's all great. So talking about the roller coaster, right? If you talk about all these things, it's just preparing us for that next freaking, either down or going up. We're just trying to prepare ourselves.
Here's a segue for you. We were on one roller coaster for a really long time, and now we're at a whole new amusement park.
There you go. But yes, absolutely. Opportunities for buyers and sellers, in 2025, stable market and motivated sellers create favorable conditions.
Yeah, I agree. There's going to be, a landscape for opportunities. And as long as you stay informed and proactive, you're going to be able to, snag yourself something that you're looking for.
Cool.
So, I like this article.
Yeah,
very
great.
optimistic. And it's always good and refreshing to see optimistic things. It's not always doom and gloom,